Good afternoon, ladies and gentlemen. I'm Madhuri, moderator for the conference call. Welcome to ONGC's earnings conference call for quarter and year ended on 31st March 2025. We have with us today Sri Arun Kumar Singh, Chairman and CEO, ONGC Group of Companies, Sri Rajeshri Gupta, MD, ONGC Videsh, Sri Vivek Tongonkar, Director of Finance, ONGC and team, who will interact with the investors and analysts to discuss Q4 earnings. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone telephone. Please note this conference is recorded. I would now like to hand over the floor to Mr. Sri Vivek Tongonkar for his opening remarks.
Thank you. Thanks, Madhuri. Good afternoon, ladies and gentlemen. I am Vivek Tongonkar, Director of Finance, ONGC over here. I welcome you all in this ONGC earnings call for Q4 and financial year ended 2025. Thank you all for joining us on this call. We have with us Sri Arun Kumar Singh, Chairman and CEO, ONGC, Sri Rajeshri Gupta, MD, ONGC Videsh Limited. Also present with me are my colleagues from ONGC, Ajay Kumar Singh, Chief Corporate Planning, Sri Satish Kumar Dwivedi, Chief BD and JV, Yogesh Naik, Chief Corporate Finance, Sri Akhilesh Tiwari, Head Corporate Accounts, Prakash Joshi from Investor Relations, and Mr. Vinod Halan, Head of Finance from ONGC Videsh Limited. ONGC has compiled its financial results for the quarter and financial year ended 31st March 2025, which have been audited by the statutory auditors. The financial results have already been released on 21st May 2025 through a press note and sent to the stock exchanges. This has also been sent to the analysts who are on our mailing list. A brief synopsis of the result follows. The company has earned a profit after tax amounting to rupees 35,610 crores during financial year 25 as against PAT of rupees 40,526 crores in financial year 24, a decrease of rupees 4,916 crores, which is about 12.1% down. Sales revenue for financial year 25 is rupees 1,37,361 crore against rupees 1,37,774 crores in financial year 24, partly because of lower per barrel realization of crude oil. During financial year 25, operating expenditure increased marginally by 753 crore rupees, that is 2.8%, from rupees 26,725 crore in financial year 24 to rupees 27,478 crore in financial year 25. During financial year 25, there is an increase in exploration cost written off, survey and dry well costs by rupees 4,257 crore from 5,569 crore in financial year 24 to rupees 9,826 crore in financial year 25. Major wells charged as dry during the financial 25 were at Western Offshore Basin, rupees 1,152 crore, at KG Basin 1,808 crore rupees, at Kaveri Basin 779 crore rupees, and at Assam Arakan Basin rupees 359 crore. During the year, ONGC declared total 9 discoveries in its operated acreages. 8 hydrocarbon discoveries have been monetized during the year. Reserve replacement ratio 2P from domestic fields excluding JV share was 1.35. ONGC has achieved reserve replacement ratio of more than 1 for the 19th consecutive year. During the year, ONGC drilled 578 wells. This is the highest recorded in the past 35 years, comprising of 109 exploratory wells and 469 development wells. ONGC invested around 62,000 crore rupees in CapEx during the year, thus achieving highest ever utilization including acquisitions in a financial year. Exploration CapEx of rupees 10,300 crores was invested in during the year, This is up about 25% from the previous year. The standalone crude oil production during the previous year, during 24-25 was 18.558 million metric tons, which is an increase of 0.9% over the previous year. The standalone natural gas production was 19.654 BCM as against 19.978 BCM in financial year 24. To address the production decline in matured and marginal fields, ONGC is proactively enhancing well interventions and accelerating new well drilling initiatives, which includes the recent engagement of technical services providers. The board has recommended final dividend of 25%, that is rupees 1.25 per share. With a dividend payout ratio of 43.3%, the total dividend for financial year 25 would be 245%, which with a total payout of rupees 15,411 crore. This is the highest quantum of dividend paid by ONGC. The company at the consolidated level has earned profit after tax of rupees 38,326 crore during financial year 25 as against rupees 55,272 crore during financial year 24. This is a decrease of about 30.7%, of absolute terms rupees 16,976 crores. This decrease is mainly due to decline in profit of subsidiaries HPCL, MRPL and OPaL. At the consolidated level, gross revenue has increased by 1.5% from 6,53,171 crore rupees in financial year 24 to 6,63,262 crore rupees in financial year 25. With this, I have finished my briefing of the results of fourth quarter and financial year 2024-25. Now I will request Sri Arun Kumar Singh, Chairman and CEO ONGC, to address the attendees. Thank you.
Good afternoon, ladies and gentlemen. If you look at our performance, it can be classified or bucketed basically in three categories. One is our conventional E&P business, and second is renewable, and third is our refining and petrochemical. So first category, let's look at E&P. E&P, basically what our PAT going down by 12% is, if you single only reason, you can say is out of 4,000 some odd hundred crore, 4,200 is on account of exploratory well write-offs. Exploration in our business is something like investment. It gives, unless you explore, you don't find new finds, you don't get. And unless you get new finds, your future is not assured. So you would note that this year we have accelerated our exploration on both sides. So capital expenditure itself is now 25% up. And naturally, we had some discovery, we had some dry wells too. So basically, if you discount this write-offs, then our profit is at the same level. PAT is at the same level. So that is the first thing which I wanted to say. The second part is that, contrary to a general belief and numbers over many years, this year, last year, and basically we at standalone level our production went up on oil side. And this is a very heartening news, because we believe that this positive story will remain, and because of the actions that we have taken. Now you will say that what is it giving us confidence? That is also reflected in the fact that despite PAT going down by 12%, we have kept dividend at same level, because we feel that we can sustain this, we can do better next year, and primarily on account of production increase. Production, in fact, the moment we are done with 98/2 the gas production will go up. And also, you are aware that we are in the throes of doing 10 SCM more production CapEx work, which is absolutely on dot. And hopefully in the last quarter of 25-26, we'll get 5 SCM additional from the project, which is almost 60-70% complete in Western Offshore. Let's come to oil. Oil side, while we have done many interventions to make sure that we remain steady in our existing fields, we have big hopes from ESP that we have signed with BP, and that is dot on course. On 4th April, all the resources of BP are in our establishment, and we are also thankful to them for giving the best talents for enhancing the production of Western Offshore, that is Mumbai High. Hopefully it will start showing result after some time, and that is the hope we have, that, and also some more improvement in 98/2 in oil production. So these two put together, we are sure of our oil going up. Gas, I told you that 98/2 main platform is to be put in place. Everything is done except for one platform, which is basically living quarters. So that work, once we do, then we can enhance production there, and then also DUDP, that is the one upside, and then we have another DSF in Western Offshore, which is also around 4 to 5 SCM. So with this, we are very, very confident that we will have our growth story intact. At least what we have done is not flash in the pan. Earlier, we were going negative, but now you see at least we have turned positive, and we hope to remain positive for years to come. That is so far the production side is concerned, and now 2-3 more things just I'll cover. That one thing is that we are investing big into future. Out of 62,000 crore, we CapEx we spent last year. We have 38,000 crore we spent in conventional business, E&P. 18,000 crore we infused into OPaL, so that ONGC ownership is now 95% plus. And also that basically that what we have promised to our shareholders, we have delivered. When we were investing in OPaL, you all had a lot of questions that what will happen to the gas, raw material, what will happen to the SEZ, what will happen to, third question was, what 3 factors, no? Capital restructuring. So now you know that OPaL, at least from this quarter onwards, we hope to have a very, very good performance compared to yesterday's. So all 3 were delivered. It is out of SEZ now, which is giving at least 700 to 800 crore per year boost. We invested 18,000 crores, so now the finance cost is down to this extent, because this was all money lying on, and we were paying interest. OPaL was paying interest. And of course, the big thing is gas. The input gas now is available to them a new well gas price, which is roughly $8 at current price, against market price of $13 to $14. So OPaL turnaround is benefit goes to ONGC and OPaL both, because it is a subsidiary of. You may be aware that one more subsidiary, that is ONGC, going is good now. So naturally, we expect that this will also do very well. This quarter, even MRPL is doing very well. So if refining margin remains at this level, we can expect MRPL also to do very well. So all 3 big ones. And this year is also, you may be aware that from OVL side, a big laggard was Mozambique delay. But now Mozambique is almost, work is happening almost any day. We expect force majeure to be called off, but work in any case has started in a big way. So we expect Mozambique to be delivering its gas in next after 3 years. So that is something a very big upside for ONGC as well as for OVL. Now coming back to dividend payout, our friend Vivek conveyed you that is 245. We are also proud at least to say that among CPSEs, not the banking sector, if you leave banking sector, CPSE, Central Public Sector Enterprise, ONGC is the highest profit making CPSE, and even among any company of government in country. So that is something that we are very proud of. Now I come to futuristic thing. We don't mind sharing with you that OPaL, we are on the verge of closing everything for its ethane sourcing from 2028, right from terminaling to sourcing to shipping. So this is something that is a good boost for OPaL because OPaL will need ethane in bigger numbers. LNG business is something that is a natural bet for us because you would be aware that we can have a model where all the integrated oil companies or gas companies have those who produce, they have a natural hedge when they sell. So because oil and gas, if at all it links or goes up, you make a lot of money there. If it goes down, then you make a lot of money in the downstream side. So LNG downstream, we have big aspiration. Hopefully you'll get to hear something big once it crosses the threshold. Now you are aware that we have roughly 30%. Our offshore fleet is basically, we have lots of requirement of vessels and hydrocarbon transport vessels. So naturally we are thinking of investing big in this vessel business too, because this is something that it is our line of business and also continues to be a good profit space. Green energy, I just want to tell you that in 1 year, I don't know how many examples in the world is there, where you jump from 0.1, 0.2, gigawatt to 2.5 gigawatt in 4 months' time. In January 25, if I remember correctly, we were at 192 megawatt. As on date, we are almost 2.5, if I'm correct, because 2.23, 2.34 is INR plus PTC, and plus you add our 192 we already had, so we have now 2.5 gigawatt. Anybody having more than 1 gigawatt in the renewable space is considered formidable. So I'm very happy to see that ONGC has become formidable in no time. In no time, I repeat, in no time, it has become a formidable force in renewable energy space. You may be aware we have planned to go up to 10 gigawatt. Today we are 2.5. So 7.5 we have to add by 2030. So every year our rally should be around, if you go by 1.5 additional, to reach that goal of 10 gigawatt, which holds us in good state from both sides, from profitability point of view and also from a renewable commitment to the world. That being a fossil fuel company, we'll do our bit of job to see that world is greener and better, and also making a good business sense. So now this is something, this area that we are doing well, and we hope to do better in years to come. Now coming to KG, as you know, your favorite 98 bar 2, we are at 34,000 barrel a day with peak production around 45,000 barrel a day. Peak production happens when the wells mature and also the reservoir, all conditions satisfied. As you are aware, we started our production sometime in January 24, and gradually we have been ramping up to reach up to 34. So another 10 to 12,000 we should expect from this field over the period of time. Now coming to gas something that we are producing, well, and once we are done with everything, we should reach our target of 10 MMSCM. Now it is something that is extremely good reservoir, and also it is realizing good price for its crude, because every month we sell it on auction or something. There is a massive interest from everyone for this crude, as visible in the rate that we get, mostly better than Brent. So that is something that this year term contract we have signed with one of the company for December 24 to March 26 for approximately 20 cargo. And this is something that we want to tell you is a term contract with another company for 12 cargo. So this is something that this product of this field is something that has really stabilized. Natural gas, I told you, KG Basin and EOA both. Now we have some sales on exchange happening, IGS sales. So that number, one big story which I missed is this year our roughly we sell 42 MMSCM a day, and this year our new well gas has already reached 20% of that. Today, this month we are hovering around 20%. With every year, this is likely to go up by 10 to 15% more. Last year, new well gas gave us, because the price of new well gas is 12% of crude, naturally this is much better than the 12% of crude. Even if you take 65 and all that, it comes around $8 per MMBTU, which is much better than 6 point something that we get for APM. This additional revenue last year was around 700 crore. This year is likely to become, if all goes well and the prices remain stable, this is at least should add to ONGC kitty for not less than roughly around 1,500 to 2,000 crore additional. So this is what I wanted to share with you. Mozambique I shared with you. Mozambique you know more than me, because this has been in the air for quite some time, and that we have shared with you the LNG. I think I covered everything, but one more thing I want to share with you. While revenue you saw, but we are very proud to report that cost side we have done very well. Cost side is almost, we have kept 24-25 cost almost at flat level of 23-24. So you can appreciate that point, that against the natural inflation of 4-5% and the natural increase in many things, it means management effort in containing cost is paying off. So all I wanted to tell you that should the requirement be more to focus more on cost, we will not hesitate in taking drastic steps. Big improvement in cost around 2-3 sites, like our logistic cost is much better now. Second, we have opened a new port, because most of the new activities in Western Offshore is more closer to Gujarat. So we have created another base to serve our Western Offshore, that from Pipavav, so that fields which are closer to Pipavav will be served from Pipavav, so that we save a lot of money in logistic cost. And the field which is closer to Mumbai will be served from Mumbai. This is one opportunity that gradually we see that a lot of saving will happen on that account, because the distance of travel of everything. We have moved a chopper also to Surat, so that we serve Gujarat side, we serve from Gujarat, and this side we serve from here, which otherwise we were serving. But Need has arisen just now, just 1 year back, because a lot of new exploration and new production is going closer to Rapti and Basin and satellite fields for gas, which I told you DUDP or DSF, all are in that region. So naturally, this side we expect. So what I wanted to tell you that first side we will do as much as we can. However tough it is to take that decision, we will take. Revenue side, I told you. Future, I told you. Renewable, I told you. OPaL, I told you. MRPL, I talked about. HPCL, I talked about. So this is some and substance of the whole story. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. The first question comes from Probal Sen from ICICI Securities. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. I have a couple of questions. Firstly, as far as KG-98 by 2, you mentioned the oil production level of 33,000 to 34,000, going to 45,000 barrels of oil per day. Can I get a similar number for gas in terms of when has production officially started? What is it right now, and when do we expect to hit, even as a range, when do we expect to hit the 10 MMSCMD target?
So once the platform that LQ, just I want to share with you more. All wells are ready, all pipings are ready, all the gas flow lines are ready, platforms for processing platform is ready. All we have to do is to install a living quarter. Living quarter, unless living quarter comes, that operation, because controls are there. That work got delayed for some reason, and we are hopeful that it will get done, because we are waiting for weather to. Once weather improves, then it will get done. So I want to give you a ballpark number.
Mm-hmm.
Right now we are producing roughly 2.75 or so. We will move to another level of 6 to 7 once the platform gets done, because then we'll open the process and all that. This is the minimum we'll begin with, and then over some time, what time it will depend on the maturation of field and reservoir condition, we will reach our peak stated production of 10. So this is what the numbers look like.
So, sir, if I can try and summarize as per my understanding, current 2.8 will go to 6, 7, hopefully sometime in this financial year. And then maybe peak production or, maybe hit sometime next year, assuming everything goes well. Is that a fair assumption?
Yeah, that is certain. But one thing I want to tell you, almost same number will come, 5 MMSCM will start coming from January to March in Western Offshore from the new field called UDP. That is January, March.
January, March 2026.
Yeah, exactly. But financial year 24-25. So 25-26, sorry. So this project is on dot. All the rigs are in place. Jacket has come. So drilling is going on. 4 months we take till a well. After that, platform is already fabricated. We have to just mount on it. And then January to March we'll start opening the wells one after another. So that 5 MMSCM is additional you can take in our kitty in last quarter.
Got it. So
that is also a big number, because 5 MMSCM is roughly approximately 1.75 million tons.
Right. And so this 5 MMSCMD, what will be the pricing Okay. This will also be based on HPHP pricing or this will be new well pricing?
It is a new well pricing.
So for
This
KG
will be on the new well pricing.
KG basin is HPHP.
Yes, sir. This is what I was clarifying. But this, the 5 MMSCMD from double upside will be on new well pricing, right?
New well pricing. Yeah.
Right. So the second question, if I may, was around OPaL. Couple of things I wanted to clarify. And the first was, in terms of the input requirement as of today, we are, correct me if I'm wrong, we are currently consuming a mix of naphtha and gas in a certain mix. Is that correct?
Exactly. The design is like that. It requires some naphtha and majority gas.
Is it possible to share the exact volume, sir? How much naphtha and how much gas is being consumed today?
60-40.
Currently, we are operating 60-40, 60% naphtha and 40% ethane.
And this we expect to move almost entirely to ethane once our ethane import facilities are done. Is that what we plan to do?
Naphtha and ethane.
And this proportion will remain the same?
Same. Right now, ethane we are getting from rich gas. That will get replaced by US gas.
Okay. So one more, just last question on OPaL. When we say that moving away from SEZ has added, will add about 700 to 800 crores, I believe is what you said. Just wanted to understand exactly what changes, how does this benefit actually come about?
So basic comments, very simple. We conceived OPaL in 2006 based on the assumption that we'll export the product.
Mm-hmm.
So we took it in SEZ zone. But in next 10-15 years, what happened in the country is that country's own indigenous demand grew. So today OPaL is 92-93% indigenous. So which was paying both the duty. When we are selling in domestic market, we were paying custom duty as well as excise. So now custom duty is gone. That money is coming to around because once it is out of SEZ notified. So now from effective 4th April, 8 to 9% saving is there in this way. So it is exactly what we told you. Depending on price, it depends on what happens in the petchem price because it's import parity and all that. But given the fact that at one point in time it was hovering around 850 to 900 crores. Now, of course, the price has fallen, so it may be 700 to 650 or so.
Appreciate the detailed answer, sir. I'll come back in the queue. Thank you so much. All the best.
Thanks.
Participants are kindly requested to restrict with one question in the initial round. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from Bhaskar Chakravarty from Jefferies. Please go ahead.
Thank you very much for the opportunity. It is very heartening to see daily crude production rising 2 quarters in a row. Could you share with us whether the trajectory is going to remain like this over FY 26 and 27 and what kind of production targets do you have on the crude side?
So month on month, of course, very difficult to say, but at least you know that we expect some number to kick in from in this FY itself by the year end from TSP initiative, some number. While all the numbers will come in 26, 27, 27, 28, but some number we expect to kick in 25, 26 itself. So for us, basically we are saying that we are hoping at least in 25, 26, it should be around, B is around 21.5 million ton. So that basically this trend should continue and because we have no reason to, because everything is stabilized now and you may be aware that surface facility in Western Offshore we have improved as a part of our steps for, not making system lose any ton. So pipelines, maybe everything, whatever we could have done, that is on course.
understand. And
Yeah.
sorry. And this GSF field, is there a timeline around which that is going to come online?
27.
It is DSF is 26 December, if I remember correctly, because DSF is around 4.5 or 4 MMSCM. That work is going on, but still, because we have some all orderings done, everything is getting fabricated. So once we have in January, March, we have both 98 bar 2 upside and then upside coming. And then after that, 98 bar additional production and some 25, 26 end. This Daman, this DSF block will come. So we are hoping that for 2-3 years, at least, we have planned everything for production to remain up.
So, like you said, for crude, sir, would it be possible for you to share the gas number as well? For
Gas number, we said that from now, we have roughly, we are saying that 25, 26, we are hoping around 21. And then 26, 27, we are hoping around 22. So 5-6% increase each year on year. The standalone I'm talking about. Yeah.
Thank you. Thank you very much, sir. And all the best.
Thank you.
The next question comes from Mayank Maheshwari from Morgan Stanley. Please go ahead.
Yeah, Mayank. Hello? Yeah, we can.
Can you hear me?
Yes, we are able to hear you.
So, first question. Sir, my question was a bit more long-term question, which you kind of commented earlier in terms of trying to kind of grow your fleet yourself and invest in there. Can you just give us a bit of a view of how you're thinking about those investments for yourself, as well as on the cost side? You did talk about a few areas of cost controls. Can you detail out there as well of what you're kind of doing incrementally for the next few years to kind of keep costs under control?
So cost side, some tailwind from market itself, because rates, which was, we at one point in time were taking it $90,000 a day, that is now down to $35,000 a day. So you can infer your own numbers, because we have around 30 such rigs in our western offshore. So cost side, we are very, very bullish that whatever contract we sign, this contract what we have signed is for 3 years. So if the same trend continues, it means our average rig cost, rig cost is our, out of 40,000 crore, 10,000 crore is our rig cost. So that is a major component. Second is as I mentioned to you, that our chopper movement, our vessel movement, that is also around 6,000 to 7,000 crore. That we have organized in such a way that it has to travel less, because by opening a base in Gujarat. So that also is supposed to give us some good money. And now, in fact, we have also some couple of more measures, like internal measures, like, better manpower deployment, better growth opportunity and all that. So naturally, that side also we have done well and will continue to do well. So these 3-4 things should give us a good handle on cost. It has given half, we have almost achieved 50%, but 50% more we can achieve in this FY or next time. Fleet, yeah. Your question was about
fleet. Yeah.
Fleet, I will just say that we have, you can imagine we have roughly 50 to 70 vessels, which we take from market. So as a matter of strategy, our own, if you own the vessel also in some space of vessel, will be more profitable, because there is a shortage of vessel in the world and we are paying, we feel that we are paying more than acquisition would be probably better model because some of the market is not responding to new investment in some category of vessels. So that is the opportunity we have before us. So that is what we are talking about.
And so just one more follow-up on, I think on the point you made that 20% of your volumes on gas right now on the new gas pricing. How do you see that kind of filter through in FY26 and 27 now? This number kind of
every year you should expect 15 to 20% of gas coming to new well side, new NWG. So in 5 years time, 6 years time, everything will be NWG, new well gas.
Okay. Got it. So this year as well, so another 20 could come in this year and then another 20 next year. So
yeah, exactly. Because now it is getting accelerated. Because you might have seen in our report, annual result, we have drilled last year 578 wells, which is highest in the history of ONGC in last 35 years. So it is primarily attributed to two things. One, new well gas, because we have drilled more and more because it's more and more attractive. And therefore you would notice that we have arrested normal decline rate of any gas field is not less than 6 to 7% a year. So we have compensated the full by drilling new wells, and it is very remunerative because prices are good. And in our country, gas prices still, I'm saying that though we are getting 8, but market today for a spot is still 13, 14. So the sky is the limit. As long as we don't lose production and keep producing. So second thing we have done very well is the exploratory wells. So in fact, we have drilled, high number of exploratory wells, and we have drilled high number of new gas wells. So this is something that both are commercially very sound and also futuristic.
Thank you for the very, very clear explanation. Thank you.
Thank you.
Thank you, sir. The next question comes from Sabri Hazarika from MK Global. Please go ahead.
Yeah, good afternoon, sir. So I have two questions. First one is with respect to the policy scenario. So the government has come up with a lot of reforms in the last few months, new rules as well as the act which has been amended. So how do you see the scenario panning out in terms of like tie-ups with global technology provider and also commercial agreement in some of the frontier assets, etc.?
So two areas. One area you are aware that we have already signed with TSP with one of the IOC for Western Offshore, which is our crown jewel asset. There, in fact, the reservoir is something that we were able to extract, but we want to extract better and faster. So this is something that has happened, Western Offshore. Now, second area which we are thinking of, or we are in the process to find out some sort of in one field particularly, that is for cluster 3. There's a lot of gas is there, but somehow it is not coming to surface. So gas not being there is not an issue. Gas is there that every time we drill and we find. So there we are seeking for some technology support in some form of partnership or something. And that we are in discussion with some people, and hopefully something should happen. Then that area we have not so far factored in our calculation, because so far we are only cluster 2 and cluster 1. But cluster 2 we are producing, and cluster 1 will be shortly do something. But cluster 3 is something we are looking for some partnership to bring that gas to surface. So there is something technology challenge problem, because some would know and some would not. So there is something that we are looking for some partnership.
Got it, sir. Thank you so much. And just a small bookkeeping question. I think it was mentioned in the opening remarks also. So, regarding the dry well write-off, so where exactly was it? And can we expect this run rate to continue or to keep fluctuating?
No, what happens is that some year you get more dry wells, some you get less dry wells. So it is very difficult to predict at what will be next year. But this was a bad year in terms of more dry wells happened. But if we don't drill, then we don't get. At least 7 to 8, you would notice that out of every 7 to 8 wells globally, you have a discovery. So if we don't drill, you don't get discovery, and then you don't accrete reserves. Oil and gas companies, value comes out of reserve accretion. So that is the issue that we are. So one choice is to not drill and allow it to deteriorate. Second choice is to drill and accrete. More so for our country and our company, we need to explore more and more. It is investment into future, as simple as that. Like you invest in share market for long-term share market.
Got it, sir. Thank you so much and all the best.
Thank you.
Thank you, sir. Our next question comes from Varadarajan from Antique Limited. Please go ahead.
Thank you for the opportunity, sir. Just focus on this new investment which you referred to. So in the light of all the investment plans you have laid down, what would be the CapEx guidance year on year, and how much should be spent on each of them? What is the current thought process?
So, like last year we spent CapEx, you mean E&P sector, right?
No, overall, looking at other areas as well.
Okay.
Okay.
So
going
now,
forward, how would you be looking at it?
So now, with the services cost falling, that likely we are expecting some fall there. And if whatever the plans we have gone, our CapEx should hover anything between 30 to 35,000 crore. So this is something that will include all. In fact, there will be some in renewables with some E&P, because you are aware that we have OPaL we are done with. So basically, E&P and renewable put together, we expect 30 to 35,000 max.
And how would other new businesses like LNG and shipping?
LNG doesn't require capex. Basically, unless we buy some asset, abroad, or some LNG terminal we buy. Otherwise, LNG, all you have to do is do a long-term, deal, and that's it. And their provider is OPEX kind of model where we buy and sell and we pay.
And on the OVL front, you mentioned Mozambique. Any update on the other assets as well? Thank you.
So I'll request MD OVL to answer this. Please speak.
Good afternoon. Thank you. As Chairman Sir has replied that Mozambique we are doing very well. We see now the progress happening on a modular concept all over the world for the equipments and other things to happen. The beach landing for the equipment to come in and start construction has also been completed. We expect force majeure to be removed anytime now, and all the vendors are in place. So we are confident that by late 27, early 28, we should have commissioning of this LNG trains. On the other assets, our production in Russia is as normal as ever, and we had increased our production in Colombia, South Sudan, and in also we have added our production in Azerbaijan. We are doing well in Lower Zakum, where the production is back to above 400,000. So on an joint operated projects, ONGC Videsh production has increased by 9% last year, and so we see that there will only be upsides as we go ahead. There are few other business development opportunities that we are pursuing. As and when that happens and that
those fructify, we'll come back and inform the market as soon as it is done.
So if you have anything on Sakhalin as well as potentially Syria.
Sakhalin, let's come to Syria first. Syria, we had two projects. One was AFPC Syria, where Shell was the operator, and we had one block 24, where we are the operator. Both were producing properties. Block 24 was under development. This recent development of the sanctions being lifted in Syria, we are trying to understand all the implications of that, how the things stand on the ground, how our partners will look at it going forward. But it's a good sign that if things come back to normal, it will only help us. On Sakhalin one, let me reiterate that we got the approval of the Russian Federation in November 2023 that to get 20% stake in the incorporated entity. It also and the production has been going on as normal there. It had come down to zero and it had picked up to 180. Now it's around 150,000-160,000 barrels. There is an issue of our shares being issued from the registrar on our transfer of abandonment fund which we hold here due to the banking channel restrictions. We are expecting that the requisite decrease for transferring those abandonment funds in rubles would come through soon. In parallel, as you are also hearing, we also hear that there is some discussion on the geopolitical scenario between the different stakeholders on how to resolve the Russia-Ukraine conflict, and we see only upside there also. If the sanctions are lifted and other things happen, it will quickly, then we can move ahead with that.
That's very useful. So thanks a lot.
Thank you, sir. The next question comes from Dagan Dixit from Elara Securities. Please go ahead.
Yeah, thanks for taking my question. Sir, just for the bookkeeping question, since December, I observed that you have changed the classification of the sales revenue in your release. This crude oil, this JV in the non-operated and operated JV, and same for the gas, I think that you have done. But I think you have maintained the same production and sales volume as the earlier classification, I think. So it would be helpful if you can tell what is your operated JV value, or at least operated JV sales volume in production. That's just for the easy for the apple-to-apple comparison actually.
Operated JV. So Dagan, actually, if you see, previously we were providing the entire revenue. That was basically, one was for nomination, the other one was for JV, which included our KG-19/2 and other 100% operated JV. Okay. Now, if you see the data which we have sent and which is there on our website also, where we have segregated our production figure as well as sale figure in line with whatever areas, wherever we go and put up any figure, whether it is a mystery site or whether it is our press release. So all the data are matching over there.
Okay. So you can value is also in the same.
Yeah, you can refer our site also for that purpose.
Okay. Yeah, that's from my side. Yeah, thanks.
Thank you, sir. Dear participants, if you have any questions, please press star and 1 on your telephone keypad. The participants are kindly requested to restrict with one question in the initial round. The next question comes from Hardik Solanki from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. So there has been a restatement in the JV volumes when you look at. So may I know the reason? For FY 24, there's a restatement and there's a decline which is FY 25, right?
Restatement. Sorry, come back, Hardik.
JV production.
Restatement.
Yeah, JV.
Okay, restatement.
So basically, if you look at the volume numbers which are being given in JV, in the the analyst file which you share, right? So over there, the JV volumes have been reinstated for the FY 24, if you look at. The oil production and the gas production both.
Yeah. So actually, I told you previously also, what was happening when we were putting JV, the NLP production was also part of it. And even our 100% operated JVs were also part of it. Now we have put all those under the standalone. So now whenever you see our standalone production, there you will find a production which includes KG 98/2, and the non-operated JVs are only there under the head JV currently.
So basically, it's only our share, right?
Yeah, it's our share only.
Okay, so we reinstated this year for FY24 as well.
Yes.
Yeah, and secondly, on the OVL part, even in OVL, if you look at, there was some revenue reinstatement of the crude oil. There was a major jump in, the oil revenue for OVL. So can you please, throw some light on that?
Yes, I think there was a reinstatement. We sell our lower Zakum crude through our ONGC subsidiary, and we had taken it that as an agent they were selling the crude, but now we have considered it as a principal and booked it to the main revenue part.
Okay. Sure, sir. That's helpful. And one more thing, from this year we have also considered the OPaL, right?
Yes.
Okay. Yeah, sure. Thanks, sir. That's really helpful.
Thank you, sir. That would be the last question. Now I hand over the floor to Sri Vivek Tongonkar for closing comments.
Yeah. Thank you all. Thank you all for being present in our analyst call. And on behalf of ONGC, on behalf of Chairman ONGC, I would like to wish all of you all the best, and thank you very much.
Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsaba's conference call service. You may disconnect your lines now. Thank you and have a pleasant day.